Welcome aboard. Thanks for joining me for Trading Buddies on this Monday, the 13th. Black Monday, is there such a thing? I don't think there is. 13th of March. I'm glad you could be a trading buddy for today, and it's wonderful to have you on board as always. A few things have happened over the weekend, apparently. Whilst I've been incommunicado, I was nowhere near charts or news for the last 3 or 4 days. It's actually a public holiday here in Tasmania, Australia today. And g'day, Paul P. Happy Monday to you as well. And I've taken advantage of that. Actually, I had an old school buddy come down from the mainland of Australia, of course. And we caught up on Friday. I haven't seen any charts until this morning. I guess we better update that before we go any further and get into the gold scenario. All right, let's share screen. And I'd better change that screen before we do that. There we go. We're looking at the first of the weekly game changer bars, which is euro versus the pound. And I'm actually on board with that. Got an order set on that. We'll come back to it, though. I just want to update you on my CAD Swissy trade. Now, when you look at a chart like that, you think, oh, great, he's done a great job of getting short here. No, I was actually long. And this is just beginning to be a pain in the backside, I've got to say. Interesting level that it's smashed through this level here, but is zeroing in on this all-time low or historic low here from the 1st of March 2020. Does that ring a bell to you guys? 1st of March 2020? Should do. COVID-19. And the market went that way. Interesting that we're at a historic low, approaching that historic low again. I'm going to be a buyer again, guys. I've just got to get another setup. Simple as that. So we've wasted 0.25% trades on on CAD Swiss. We got a little bit out of the first one here, which was a first take profit job, but since then, no good. We'll continue to monitor that. Anyway, that's the update. That trade has now crashed and burned, and we've lost 0.25% to the broker. All right, let's look at gold on the hourly chart. Now, gold had a stellar week last week on this breakout. 5 out of 5, as a matter of fact, if you were trading it. Every single one was a winner. And, of course, using the formula, get out at first resistance or support, you should have done... Okay, hang on a sec. I haven't got the participants' waiting room. I don't know why we've got a waiting room, frankly, but we do. Protect us from dickheads, apparently. Why? I'm happy to deal with dickheads. Anyway, another story. So if you use the first resistance or first contact, as Ash calls it, you would have had a 5 out of 5 week, 100%. If you'd used the follow-through method, then you would have had an absolutely stellar week, as this one went to a support level. This one went to heaven. Well, it went halfway to heaven. Let's put it that way. Big move on gold on Thursday and Friday. I think that may be related to a news event which came out of California. Oh no, that was over the weekend, wasn't it? Something to do with the Silicon Valley Bank going burst. But I think that's been coming for a while, since March. Anyway, Ash is going to update us on all of that and what we should do and how we should position ourselves on it. Well, let's have a look, see what we're trading today in terms of the gold breakout. We have got a low here, candle that's just closed, and we've got a high here. Don't mind that we're in the middle of that. That's pretty cool. And we've got plenty of room to the upside and we've got plenty of room to the downside to take profit. So, yeah, let's do it. We will, and for those of you here for the first time, thank you for joining. What I'm about to do is try to or attempt to trade a breakout. Like I said, it worked beautifully last week, 5 out of 5. This week, of course, is an entirely different kettle of fish, and we'll see how that pans out. But this is still in trial mode, so it's not a proven formula. As such, I suggest if you are looking to follow it by all means. But please do not put any meaningful cash on board this trade. Yes, we got 5 out of 5 last week, but that doesn't mean we're going to get 1 out of 5 this week. So be careful. What we're attempting to do is see if gold breaks out of Asia session range. And the Asia session range, of course, is actually it's a little bit higher. It's the second candle, the 0200 candle on my chart. That's where Tokyo opens, and the last candle before London opens, which is now. So the high of that is actually here. I'll put those on the chart. So the high is above that seller bar, and the low is below that buyer bar. Now, we're not going to make much out of this if we use the first contact method, but that's fine. If you get 5 out of 5, then who cares? And again, I'm not suggesting that we're going to get 5 out of 5. Again, that was a stellar week, obviously. Right, so the entry level for the long, and what we'll do here, guys, those of you here for the first time, is trade the breakout long or short, not and short. So if the long triggers, we cancel the short. The short triggers, we cancel the long. And we use the high of the bar for our entry for the long, and the low of the range for our stop loss for the long, and vice versa. So it's an entry for the short, and this is a stop loss for the short. So here are the levels. I'll give you the exact levels. The low is 1871.48. So we would go 1871. I'll place that order first. And you will note that I'm trading this at extremely low volume because we don't yet know it's a proven system. Yes, 5 out of 5 is stellar, but that doesn't mean it's going to happen all the time. 1871, I think I said. If I didn't, I'll soon correct it. There we go, 1871. And just let me double check that. Yep. And the stop loss will be at 1890. So $19 at risk there. Or is the risk parameter, let me put it that way. The get out is going to be the monthly pivot. And the monthly pivot level is not telling me what it is, so I'll have to work that out. It's at 1864. So poor reward to risk on this, no question. On the short, but we're not adding filters to this. We're just simply looking for the breakout to go to a level and take our profit. That's what it's all about. Right, for the buy, I can bring that down. The buy is a little bit better in terms of reward to risk because we'll go up to here. But let's place it. It's a buy stop. And the entry level is, as I said before, 18. What did I say before? Should have been 1890. I hope that's right. Hope that's what I said before. That's where we're getting in, 1890. And the stop loss will be at that level there, 1871. So, yeah, that's right, $19. Take profit on the long is going to be WR2, as I said before. I'm not sure why it's not. I mustn't have my status turned on. Let me give you that level. It is 1907. So far better reward to risk on the buy than there is on the sell. So if we're going to be a winner, let's hope it's to the high side. Righto, both orders in place. Buying here, take profit here. Selling here, take profit here. Very poor reward to risk on the sell, but that's okay. Like I said, we're trading this at first contact, as Ash would call it. Speaking of Ash, I think he's keen to trade here, or I could be wrong. Actually, I've got to apologise to Ash because I believe it was his birthday on Saturday, or maybe Friday, I'm not sure which. I was completely out of contact with charts and social media and all those sorts of things, and I missed his birthday. Mate, please forgive me, and I hope you had a wonderful day.
I had a great day, actually, mate. Yeah, it was really, really good. I went to I've done an escape room. Absolutely amazing. We were sort of in this pirate ship, and you have to solve these puzzles to kind of get out of the pirate ship. It was very, very cool.
Oh, that's interesting.
Yeah, really, really good. Really good. I had a great day. So no worries, mate. No worries at all. I'm in the hot seat right now, and you're right in a way. I am looking for a trade. And I
Why are you in the hot seat?
Well, just because I'm quite keen on something. I'm just waiting for it to kind of give me a position. Now, let me just see what we've got here. Where are we at?
I've got a couple of orders in the market too, so they're a long way from entry, so there's no rush. Okay. But when you're done, I'll go through my analysis.
Yeah, I mean, I quite like some risk today. I think there might well be some FTSE upside, but I've tried to get into this position before, the pound Kiwi, and I've struggled with getting the position I want. I want it short, and the reason I'd like it short is because, let me just get rid of that. The reason I'd like it short is because the speaker out later for the UK is quite dovish. Dingra, she's quite dovish, and last time she was talking about maybe leaving interest rates where they were. Thank you, Paul P. Yeah, she was talking about leaving interest rates where they were, and thinks that the risk to the economy is probably skewed to the downside if the Bank of England continue to raise interest rates. So I'm quite keen on this, but as you can see, we've pushed down to the lower end, and this is a 15-minute chart. We've pushed down to the lower end of the of where I'd be comfortable kind of having it. But anywhere in this area, and I'm quite interested. We're not too far away, so I'm getting ready to initiate a trade here, mate. This is the price point I'd quite like to be touched somewhere about this. Which is 1.95770. We're currently at 1.9565, so we're about 10 pips away from where I'd like to, where I'd be kind of comfortable initiating a position. But this is what I'm looking at. I'm looking at a short in this one, and talking about targets. Obviously, the weekly pivot is a potential target. Probably want the stops up here initially. And then I would maybe put another position on and put a stop just above this high as well. But looking at around about, say, a 70 pip stop loss, and it's going to be, well, it's going to need to hit that position. 60 to 60, 60 to 55. It's going to definitely need to get up to here. There's no point in me getting in here. I need to try and get at or close to a 1-to-1 as possible. There's this area down here. I think I might try and aim just below the weekly pivot, but I think the weekly pivot is the obvious target. So I'm really looking at probably this. Yeah, 67s to around about the same to the downside. So the 1.9577 is the entry, and I'm looking at 67 stops with a 67 target. And firstly, let's see if we get initiated, and then secondly, let's see if it can actually kind of do anything for us. But I'd also look to re-enter as well at the lows if it did start to pick up, which would it's looking a bit tight actually, mate. not as attractive as when I first looked at this. I think it's because I was looking up here initially, because there was this trend line going along here. This risk to reward may not be good enough. I was looking along this trend line, and at that point it was a decent risk to reward, and it was really sort of aiming for the weekly pivot down there. So it might need to get a little bit higher before I can genuinely initiate something that's worthwhile. Probably back to this level here, which is at 58.30. Yeah, 58.30. That's the cheapest I'm going to be able to get it, I think, or most expensive, or you could say it that way, because it's got to go up. Anything lower than that, it just doesn't really kind of make enough sense for the risk to reward. So it's going to have to be there, mate. I like the way it's looking. You know, if you look at this along the hourly, decent move down on the hourly, decent bar here.
If you want some moral support, I can see the three amigos and a break of that. A break of the range that they emanated from, or from which they emanated, to be more correct English-wise, and you had a breakdown and a retest. So that does make sense to me.
It does look good, doesn't it, on a technical basis? I mean, and as I say, we got a relatively dovish speaker out from the Bank of England later on, so that's the one I'm looking at. Maybe it's got to be the right price. I think we might well get some risk in the market today. Maybe not. We haven't really had it early doors, but you can see that there's this gap down here. When this gap is filled, I'm looking for upside in the FTSE. But I've got to see this genuinely trying to turn around. I won't just take the position on here because I don't think it's worth it. But I think that if we can get something that looks like it is attempting to, actually the gap's down there. There's this gap here. On the hourly, but if you look on the 15, it's all the way down here, so it might even need to see it to hit this this daily pivot before turning around. Still looks very bearish at this moment in time, but it would look like an inverted head and shoulders, even with the gap being filled. As long as it's a kind of a bar with a tail, it would look like an inverted head and shoulders. So I quite like that. The Nasdaq, the same sort of thing, really. I'm looking for upside with the Nasdaq, but I'd like to see this weekly pivot tested. And I'd probably prefer the Nasdaq of all of them. You know, if there's going to be risk, this is usually the one to look for. Gap down here is a bit of a problem, and you're really looking for some genuine confidence in the market, which may well have come from JP Morgan. I think JP Morgan came out and said that they are now looking for a pause with the Fed. I mean, it's only one bank, and there does seem to be some contagion going on with the banking sector right now. After we saw some reports, some pretty terrible scenarios and situations. Silvergate was the bank, and it's strange, really, that we're getting them so far apart. You know, we seem to be getting contagion, but it's the knock-on effect seems to be quite protracted, because we get in. Yeah, you remember last year, I think it was, we had the Chinese building firm that escapes my name now.
Yeah, I remember.
Those guys kind of going under, and every sort of talks about those guys, you know, are potentially struggling. So we have the Chinese building firm. Now we've got a bit of contagion with the banking sector, and that has put the market really on tenterhooks. We're seeing all of the banks really in the UK at least. Showing some pretty some negativity. Even HSBC, that managed to acquire something earlier on for £1, they're down, not by much, only by 0.25%, but as the biggest, you know, that's it's a bit of a deal. We got Lloyds Bank down around about 0.5% as well, and I can't even see where Barclays is, but we've got there's Barclays there. We got Barclays down at over 0.5%. So there is some nervousness out there with the banking sector, and actually that probably puts the risk aspect of trying to trade the FTSE right now on hold. Shell's down this morning as well, as is BP. Yet we're seeing oil doing okay. You know, we're seeing oil kind of like have a decent push to the upside. Dollar all of a sudden becomes the weaker of the currencies as we close out this first quarter. The strongest two currencies are the Kiwi and the pound, which makes it a little bit tricky with the Kiwi and the pound, you know, to trade it as a pair if you're going on the seasonals alone. But I like the Kiwi. Kiwi yen would have been my favoured one, but I'd still need to see something which would just suggest I'm going to clear these pivots. This is a bit of a problem, all these pivots in the way. Get through that one. It's got the next one to go, but I do like the Kiwi yen. The Kiwi yen's probably my favoured of the currencies, and the reason for that is that I think the yen's had a decent run, really off the back of the other kind of nations rather than its own strength. We've got trade balances out this week from Japan, and they've been really poor, really poor. And one of the reasons that the yen tends to be the safe haven is historically their decent trade. They tended to be a safe country to go to because their trade balances were net positive most of the time, but they're very much net negative right now. And I think that we could see some further downside with that. And if there's a little bit of risk that comes back in, that's also going to take the yen kind of off people's watch list. So Kiwi yen would be probably the one that I'd edge towards. But I like the Kiwi. I just like the Kiwi right now. You look at the Kiwi across the board, it's rallying against the yen. It's doing pretty well as well against the dollar. So far this morning, it's doing pretty well against the dollar as well. Against the Aussie, we've seen a rally up to the weekly pivot, probably going to ease to the downside now, but it's doing okay against that. Also against the euro, which the one reason that this makes me a little uncomfortable with the euro is because we got the ECB's rate decision this week, so this could turn around relatively fast as well. But it looks all right against the euro as well. Nothing really to get into is the problem. There's no setup. Same with the pound Kiwi. There's just nothing that we can actually kind of get our teeth into at this stage. It's just right at the lower end of this small range on the 15-minute chart. So I want it nearer the upper end, and then I'll initiate some positions. But not a great start to the morning, mate. Not what I was expecting to see. I was expecting to see just a bit more positivity kind of coming out of the blocks after the huge sell-off that we saw on Friday and last week. I thought we'd come out of the box relatively positively, but we haven't. And that's making me a little bit more nervous. But I am still looking for potential longs in risk assets if things start to turn around.
Interesting. My only question to you today, because I've got a short period of time that I can be here today, but was going to be this Silicon Valley Bank that the Fed are pulling out of the SH1T, or at least their depositors. They're pulling out of the SH1T, which means, of course, that the Fed are going to produce money that doesn't exist again. Where does this end? What the hell? What does that mean? What does that mean to markets? What does that mean to gold? What does that mean to the S&P 500? And the NASDAQ in particular, with the Silicon Valley Bank, going broke. Well, I mean, we knew that was coming. Apparently, that's been happening since March. But now they've just officially gone through the SH1T tube, and the Fed apparently are going to honour the depositors, which means the Fed haven't got any money, right? So where are they getting that from?
I don't know. I don't know whether it's the same bank, but there's the Silicon Valley Bank that you may be referring to is the one that the HSBC bought, or certainly bought the UK arm. The Bank of England have sold it, so I'm not sure whether the Fed are probably going to do the same thing. So I'm not sure whether there's a Fed story so much. I think that there's just I think the banking sector is trying to mop up some blood effectively, so it's sort of it's attempting to kind of get things sorted itself, and hence maybe why HSBC have gone and bought this Silicon Valley Bank. Okay,
so if you're saying the Fed's not involved, that's a different story entirely, of course. But if the Fed is involved, 15 years ago we went through exactly this process. And it didn't end well. No, it didn't end well at all. No. So to me, and I wasn't surprised to see, as a result, well, maybe not as a result of that, but the Swissy had an incredible 2 days last week, Thursday and Friday, and I don't know that that's related, frankly, but maybe there was a sniff around it. And the Swissy is actually. I was interested to hear you say that the CAD and the Kiwi was the CAD and the Kiwi. I can't remember. Pound and the Kiwi, maybe. With the two strongest currencies, the Swissy had an enormous couple of days.
Yeah,
right.
Seasonally,
Sorry,
yeah,
mate.
yeah. No, you're absolutely right. You're absolutely right, and the Swissy would probably continue to be that leading currency right now. And I think one of the main things about the Swissy is that it has really taken the mantle of the safe haven off the yen, because it's it's usually between the two of them, but the finances in Switzerland are just a lot more solid than they are in Japan. They are net exporters, and they have a inflation rate at 3.3%, I think, which is nowhere near anybody else. So the country's in relatively good shape if you sort of consider it against others. The difficult thing always with the Swissy is that that's not what the S&B want. They don't want a strong currency. So because of that, you're always kind of wondering whether they might do something which would weaken it again. But at this stage, if you look at the fundamentals, the Swissy does look like the correct currency to be trading long. And as I say, I think that will probably continue. And maybe one of the better trades is actually Swissy yen, because I think the yen probably does potentially turn around, or with weak trade balances, it could lose its shine. But the Swissy would be still that safe haven, as the markets, as we can see right now, the markets are still in relatively bad shape. So let's have a look at the Swissy yen. Here it is. Yeah, Swissy yen will look good as well. Let's just have a look at this over the longer term. I mean, it is trending to the upside. Looks like it might well have got through something here as well. Just about. It's just poked its head through there. And let's see what that would look like. Yeah, it looks pretty good, doesn't it? I mean, this might be that looks like the area there with the Swissy yen. Back down to there.
Yeah, horrible place to buy, but yeah.
Yeah, well, let's have a look on the longer term time frames. Yeah, it's not great, is it?
Yeah, I agree with you. I hate to say fundamentally, but and that doesn't mean fundamental announcements. Basically, or intrinsically, I'll put it that way. It makes perfect sense.
Yeah,
for the Swissy to outpace the yen at the moment. I'd agree with that. And in particular, if that contagion does in fact, grow legs, then I think that's the Swissy is probably a fairly decent prospect at the moment, I would have thought.
Yeah, I think so, mate. Looks like we're going to miss out on the pound Kiwi. That's not coming back at this stage. So and really, as soon as it kind of hits this level, for me, it's kind of over. I don't like any moves. I don't love, I should say. I will trade it, but it makes me think twice if I'm not in by at least the third move. And you can see here on the 15, we've got one move down, two moves down, and it looks like this might be the third. So I'm not particularly keen when it kind of gets into the third wave like that. So it might be one of those days that opportunities are there, but they are going to be just a bit more difficult to trade. The prices may not be quite as attractive as I'd like.
Yep.
Now George is in the room, and I'm interested to hear George's opinion as well about the risk on assets, and see whether he could shine a different light on it. Doesn't look like they're very good right now. I'll tell you one other really interesting index right now is the Spanish one. And if I was going to trade anything short, it would probably be this one. We've got CPI data from Spain this week, and it's not been pretty to this point. So the SPA 35 or the IBEX, it might come up on everybody's system, is the potential index to kind of look for downside in, and we're currently through this area here on the 4 hour. Possibly an opportunity. We'll see. I'm guessing you've never really considered this one, George.
Actually, sorry, George, before you answer that question, have you got a few minutes up your sleeve? Because I've got to get out of here very shortly.
I've got plenty of time. Nothing happened at the moment. So yeah, carry on.
Awesome, buddy. Because I do want to just let you know what I've done and am looking to do before I bail out, if that's okay.
Yeah, go do it, mate.
All right. And Ash, by the way, in YouTube, I don't know if you can see the YouTube feed, but Tajul has wished you a happy belated birthday with some emoticons there as well.
Thank you, mate. Thank you. Appreciate it.
Okay. Very, very briefly, I won't keep you here for too long. You know the goal scenario, and I'll leave that there. The trades that I have entered as a result of the weekly game changes, there's only a few of them. Euro pound is one. Dreadful preceding candle, this week's game changer bar, and that was that one there, that incredible spinning top. But what I see here from a bigger picture perspective, let me get rid of that, it's irrelevant, is a reluctance, more than a reluctance for price to go through this 91 handle or 91 cent handle. And if I go a little bit wider, you can see that that's just out of the question in terms of euro versus the pound going above that, certainly in the last, 15 years or something. So I take that on board, and we have come off that level yet again with this massive reversal bar here back in August of last year or whenever that was. Since then, we've been trying to rally beyond everything that came before that, frankly, and we failed. And what I see now is that level there, which has caused a reversal. If we go a little bit wider, we can see that that level has got relative history in the past as a resistance level through here, bit of support through here, bit of support through here. So I'm of the opinion that this level is strong and euro pound's not going to get through that very easily. Market has determined that's the case as well. And we've had phase one, as Ash was talking about before. Is this a reversal? I don't know. But what I've been produced, or what the market has produced me, is, I won't call it a double top at this point, because the double top should have been there, but it kind of turned up in a weird place. But what I am looking at is the most recent sequence, which is lower low, lower high, lower low, equal high. That throws the spanner in the works. So it's very, very difficult to say, okay, this is a definitive move to the downside. But I did get that weekly game changer bar. And for that reason, and the reasons that I've just described at this resistance level, this now becomes double top, lower high. And I've got a green bar, which is perfect for me, because as I say all the time, if price goes with the green bar or the green body, price goes through here and challenges this high, or certainly this high again. If it doesn't, then the opposite is generally going to happen, and we'll get a fall away. So euro pound I have entered, I haven't entered, I've entered an order. If you want to have a look at it, it's simply entering below the bar, the weekly game changer bar. Stop loss is above the swing prior to that. And first take profit is at this level here, which is, of course, is the low of last week, or the week before, sorry, spinning top. So that's pretty clear to me. I've also got an order on Aussie CAD. Now, Aussie CAD is pretty binary to me, as is the next one I'm going to show you as well. This is either going to fail today's bar, it doesn't look like it will at this point, and close underneath this trade line again. If it does, then happy days. My short order, and exactly the same process, I've traded underneath the bar, stop loss above the swing. And if we get a close below here today, then I think this is going short. If we don't, then I will cancel my order and look for a pullback to the trade line and look to change my position to a long or to a buy. What do I prefer? Obviously, the first one I prefer, but it is at a very, very strong support level, as is evidenced by this. My contention is that we may well be below that level when we enter the market. So if this is to prove support, then this is going that way. If it's to prove as a resistance, then it's going this way. So the game changer bar makes sense to me, and that's what we're trading on Aussie CAD. If you wanted to know those levels, I'm entering at 0.9085 and my stop loss is at 0.9215. I'm going to take first profit at this level here, which is 125 pips below entry, which is 0.8960. The third order that I have in the market is the NASDAQ. And like I said, I think this is completely binary. In other words, it's going to go one way or the other, but it is going to go, in my humble opinion. Now, exactly the same process that I use each and every single week is when we've got and I've got to hurry up, I've got to get out of here. When we've got a directional bias, if you like, I'm always looking for game changer bars to confirm that. And on the monthly chart, we've had these turn up quite regularly. One here, one here. Weekly chart's even more pronounced, where we had a double top. Game changer bar here, drove the market down. Game changer bar here after a rally, and this is important. You've got to have a rally, then the game changer bar, drove the market down again. One candle rally, another game changer bar, drove the market down again. Another rally, and this one would have probably failed because you had your stop loss up here, I would imagine. That one failed, but then you got another one down to support, take profit, etc. Question mark here is, where's the game changer bar after the rally? Well, it turned up just a little bit late, but there it is. It's turned up after the turn, which is somewhat disconcerting to me, but it's still there. And like I say, every time I see one, after we've got a directional bias, then I've got to trade that. Like I said, I think it's completely binary because Ash and I were talking about this last week, I think, where this looks very, very, very similar to a sentiment cycle, which means that we are potentially at an inversion point, which means that price will skyrocket in this direction at some stage. I'm aware of that, and for that reason, I think there's a second potential aversion point down here, and I'm willing to trade to there, given that I've got a reversal bar or game changer bar, the sequence of them, and I'm willing to do that to this level. Then I'll take profit. If it goes further, then happy days. If it doesn't, who cares? Look, I've got a few on my watch list. I'll just go through them quickly. I think the Euro Aussie's overbought, and I thought that last week. Looking for some downside off, maybe a false break of resistance of some kind. I think CAD Swiss, here we go again, is also on that watch list for the very same reason. It's completely oversold at this level, all-time lows. But I've got to let it hit that level now and look for a reversal, higher, low, etc., etc. So that's what I'm looking at for the week. Hopefully we'll get a few of those trades kicking off and making some money. That would be good. Guys, I've got to leave you. Thank you very much for taking over, Ash. I'll have to make you host so you can actually close the show. But once that's done, I am out of here.
All right, dude. Have a good day.
Cheers, mate. Yeah, busy. So you, George,
I
mate.
Somebody's growing bamboo down the road, mate. Molly saw it the other day. It was like, wow.
True.
Yeah. Just in their front garden.
Mate, better be the right type. If it's invasive, it'll finish up your place. It's got to be clumping, right? It's got to be non-invasive clumping bamboo.
Oh, it's in pots.
Not monopole. Well, they can actually climb over the pot to get out, go under the concrete.
All right.
I'm going to go.
All right, dude.
Have a great rest.
Am I host?
See you later. You are.
Oh, mate.
You're the host with the most.
All right. Have a good day, buddy. See you Thursday.
Cheers, mate.
So, George, we are looking at a pretty bearish market right now, mate. Any thoughts on the market? Is there a chance of a turnaround, you think, this week?
Well, I'm thinking very bearish as well. Let me just share my screen. So let's start with Hang Seng 50. This bear breakout here, if the bears are strong, they're gonna put a second leg in. And already I've got that mark. So that's the first leg. That's the first leg potential. Well, that's the full first leg. Now, where does the pullback end? I don't know. I've just put it there because I see this big round number here is another target they can go for 18,000. I mean, right now, they're pretty close to 19,000. But if they do get the second leg, that area becomes an area to target. So where is the pullback going to end? Is it today, or is today going to be a bull candle and another little bit of a pullback? I'm not sure, but whichever way, there will be 70, 80, 90% probability there's going to be a second leg, right? There's always, after you get a big sell-off, or if we're going long, there's always likely to be a second leg to the move. So I'm looking to get into that second leg, which means when I go down to the 5 minute, I'm looking to short quite aggressively for the rest of the week, unless the bulls do something pretty strong and magical here. This blue line that we have here is a low of beginning of the year, low of January. Okay, so that's the low of the year so far. We've kind of, pipped a little bit below it already with that, what was that, Friday's day. So the bears, if you like, are poised to, if they break through this level, I mean, this level here is pretty key, the 19,000 level, because it just breaks beneath the whole trending range that was December. And the bears then have a chance to go and take out that low of December and also get to this level. So if I look at the 5 minute, I am bearish. What I was waiting for since the morning, I mean, this is a good, as clean as they come in terms of bear reversal patterns, right? Wedge top, very weak breakout above high of yesterday. So this is a morning move. And we've had lower highs all the way through. The key thing that the bears needed to do was to get back into the range of yesterday. Okay, and so that kind of completely nullifies the bull case. So this is good. I mean, the market has closed. I mean, some guys have got continuous feed on their data, but my broker actually closes as the market closes. So that's pretty neat. Makes it easier to see things. When the market opens again, because we are now back within the range of Friday, and I'm thinking bearish, all I'm keen to see is how are we going to test back to the high of Friday. And if I get a reversal candle anywhere here, or even if it goes a little bit above, but it reverses back, I'm going to be shorting on that premise that I've got on the daily time frame that the bears want to create a second leg. So back to your question, I think on this particular market, there's a lot more selling coming through this week. It's just a case of when they've got to finish their second leg. And the end of it is somewhere within here. I mean, even if you look at just where the bears, I mean, that outside candle reversed, the first few candles of the month, except the open. But if you look at the breakout beneath that candle, these 3 days, so if you look at that move, the measured move of it is also within the range of a potential leg 1, leg 2. And if you look at a little bit bigger range, the high of the month to the breakout beneath this pullback, we're getting kind of into this level here. So there's a bit of cluster rather, support levels that I think can pull the market down. So that's what I'm looking for on that. Now I'll come to UK 100, but it's a little bit interesting. But S&P 500 on the daily. I mean, just look if you think as far as a bear is concerned, you're probably salivating and saying, I think we're ready to do great and amazing things and just sell off all the way down here. But Friday presents a problem. I mean, the bears were strong enough, to get to this level. I've kind of spoken about this level a few times, so I'm gonna just bore you with it for one more bit. It's this level here. I must let me show it also on the monthly. This level has been key for a long time, and it is this level on the monthly. This level here, where the bears created a decent enough reversal candle, high test candle after a sell-off, pulled back. And in the month of September last year, huge acceleration triggered the sale. They did pretty well. And in my thinking, the bears have been defending that breakout level and also this lower high here. So in February, creating a lower high, same kind of structure, smaller candle, but same kind of structure is that, in my view, is still the bears that are defending, creating another lower high. And now that we've triggered the sale already in this month, on the monthly time frame, the market is really saying there's more selling to take place, probably all the way down to the low of November, which is the midpoint of this whole COVID low and the all-time high. So that's another key level that the market can accelerate to. So from a monthly time frame, we've triggered the sale again. So I think there's monthly bears that want to push the market down. So if you come down to the daily with that in mind, even though Friday, was a bit of a problem for the bears because they should have at least closed beneath here. But, we are in some form of a bear channel that's been formed. We are at, a cluster of levels of support. That measured move, that little trading range is here, which I think we can now take out. Did I take out the wrong one? Which one is this? High low, double bottom in Jan. Okay, so that's a high low. So that was the correct one to take out. We don't need that anymore because just clean up the charts a little bit. So going into this market, irrespective of, that doji on Friday has already had its effects. In other words, it was a trading range day. So when I see a trading range day, I expect that there will be some attempt to test either the midpoint of the day or the low of previous day or even the high. So we've kind of got to the high already. So I am bearish. I just got to find ways to get into the S&P 500. The only problem that the S&P 500 always provides me is if you take any trade, before the actual New York Stock Exchange opens, the US market opens, you're going to be prepared for the market to reverse, might reverse against you, but then could always go in your way a little bit further on. It just depends, if you trade in throughout that whole session. So whatever trades I take now, I must be careful how to manage them. So just going down to the 5
It's interesting
minute.
you say that, mate, because it looked like the market's on the move. I mean, the FTSE has opened up, and of course, it's really accelerating now to the downside. The FTSE is down 1.5% this morning so far, and there is a temptation just to kind of get into the market, but the current bar is so negative that it's a difficult one to get now. I think probably psychologically it's a difficult one to get involved in. But it's one of those you just have to ignore, don't you? Just let it wash over you and recognize that a decent setup will actually appear.
Yeah, and that's a good point because I was watching it, and let's start off with the daily. So that gap up there and then immediate selling it's fantastic for the bears, but you need to get the setup to jump into it. So the same kind of logic in terms of where the market might want to go. Look at the bear breakout. That was the biggest bear candle we've had in forever, right? And the bears that follow through, which is good for the bears. So then you expect that there will be at least a major move of that. Now, the fact is, Ash, just take over for half a second, mate. I've got someone banging
Sure.
on the door. There's no. I will be back. Sorry about that. Just
No, not at all, mate. Not at all.
Yeah.
Okay. Yeah, just looking at this. I mean, my kind of look at this with a FTSE. It has come down, and actually looking at it, there probably was a setup to the downside, particularly with this gap. As the market opened up, I thought we might get just a little bit of just a bit. Hi, Lewis. I thought we might get a little bit of a relief rally, but that hasn't come in. Inverted head and shoulders is completely broken down now, and there is a temptation just to kind of want to sell this off, because it certainly appears at this stage that that there's some more room to the downside, and we could get a negative 2% day, which is very frustrating to kind of miss those days. Yeah, it looks like we're through that as well, which really could be very dangerous for the FTSE. This is a minor trend to the upside, which is now being tested. Let's have a look at it on the intermediate. Intermediate's a little bit steep, so minor trend to the upside now being tested. A breakdown of this level and a close below today would suggest tomorrow this is as good a price as we're going to be able to achieve if it closes down here. Decent horizontal level across here. And it would suggest that we're pretty close to where we'd want to enter tomorrow. But we need to let this one close, even though it might end up way down here. Very difficult to get involved in. This is accelerating away, and just impossible really to kind of I think psychologically catch, and not something that I'm going to be that interested in at this particular stage. And this is one of the challenges. This may well be part of your strategy. This. Let me just put this on this and make sure that we are definitely in the right area here. Yeah. This may be part of your strategy to trade a breakout, which is absolutely fine if that's what you do. I'm interested in the pullbacks to see if I can get a cheaper price, but there's certainly a case to be made to kind of mixing strategies in this sort of thing, and trading a breakout strategy on a day like this, and a pullback strategy on a day which is a bit calmer. But that looks like it's going. The Nasdaq now under this weekly pivot. Same sort of thing, just about under this trend line as well, by the looks of things. Just about under this trend line as well. So another one, close underneath, come back and test. That's going to look a lot more attractive actually than the FTSE. And I think Jeff's right. It's going to go one way or the other. This is a hangover from Friday. If we think about what's coming this week, then there is CPI data from Europe, which that's going to be pushing things around. CPI data from United States, and that's tomorrow, which makes the market, very, very, very tentative and a bit concerned. If you can get involved in a position here, CPI data comes in strong, Nasdaq's going to end up at the lows and maybe even through this point. If CPI data comes in relatively low, i.e. under 6%, and probably a bit lower than that, the Nasdaq's much more likely to get, maybe to this point up here to test this high, test the high of the trend line, and maybe test the monthly pivot. So at this stage, it's facing down. So at this stage, we are looking for CPI data really to come in and just bash the Nasdaq up a bit. Things could change, of course, over the next session. But right now, it does look like we should be probably trying to get involved in some bearish moves here. That's the hourly 15 giving us any opportunity? Not really. This was the only one. That was literally at market open, and probably genuinely valid on a 15-minute chart. It was a genuinely valid trade. Just about. There's a 1-to-1 there if that's the way you trade as well. So, but it looks like it's going to go a lot lower. And if we put in a little trend line here, that looks like a potential area for a test. before we start coming down. But it does look like the Nasdaq is going to end up down here, particularly with this gap. You know, if we measure that as well. Yeah, even here's a 1-to-1. Looks like it's going to accelerate down. So really just waiting for the pullback. Very, very difficult to ignore these when you see it just accelerating down. But you just, you know, unless this is your approach and your strategy, you've tested it out. Difficult really one to get involved in, even though there's money there. So I'm waiting, mate. I'm waiting for it because I think it's so far from what I can see, it's an incredibly emotive market.
Yeah. Let's see if I can. Oh, I can't share the screen again. Can you assist me there?
Sure thing. Yeah. Actually, looking at this with a Nasdaq, there's a possible opportunity if we can see something like that. So it comes back into this area somewhere, then there might well be an opportunity to see a genuine reversal signal as well. Right, let me see if I can give you powers. There you go, mate.
Okay. Yeah, so I mean, gee, it really is powering down. But you know what I always do is go back and just have a look and ask myself, did I miss something? You know, double top, lower high, outside candle. There's no ways I'll take that trade. And then you know we get acceleration down. My stop would still be above here. There's no trade I would take. So while it's going down, it would have been fantastic to have found a way in. You know, there is no way for my strategies to get into here except wait for the pullback.
Yeah, exactly, mate. Same.
I mean, it's you see these rarely. What is this? Once or twice a month, maybe. If it had set up and you didn't get in, then you can really give yourself a nasty kick. But if it didn't set up, it's fantastic to wait. Because why would it be fantastic to wait? Well, if the bears are strong as they are showing, there is going to be a pullback of sorts, whatever that pullback may be. And when that pullback comes, you know, first thing I kind of look at it is where are we breaking out from? Let's do this so that we can just see a little bit more. So we had the gap up, and you know the gap up actually started here. But the previous lower high was this in the US session. So all of this has been reversed and we are back at where there is no gap. So as far as I'm concerned, the real strength of the bears now has to be shown by this break beneath the low of yesterday. So all of this is good. It adds to my bear case. But now I'm interested to see what's taking place down here. And I mean, the reason for that is I'm always interested, what have we actually broken out of for me to consider a breakout to be strong? So all of that reversed the gap. Now we're breaking beneath the low of yesterday. I mean, that's a bit of a problem. You know, the bears have been strong all along. When you get to the low of yesterday, you know, you need acceleration down. So the breakout was pretty weak, but there is momentum down. We're getting huge candles coming up. There is absolutely no ways I'm going to be selling anything here until I see a reversal pattern, because when I start to see the biggest candles forming after such a move, and I have just want to put a rectangle there. So that's where you got to absolutely love price action and the information that it gives you, because it just tells you so many beautiful things. So that's a problem for me. I mean, all of that is good, but there is the actual breakout. You know, all of that is just reversed.
What's that telling you, George? Just out of interest, you're saying that the price action has given us the message there. What are you reading from that 3-bar pattern there?
Here.
where you put your orange, your
Yeah,
yellow
yes,
box.
yeah. So what this is telling me is that as strong as this move was, all it did was just reverse the gap up, right?
Mm-hmm.
So the actual strength of the bears now has to be shown by breaking below a key level. And if we look to the left, the key level they're going to break below is the low of yesterday, not just reverse a gap up. Now, when I look at here, the first candle to attempt to break below the low of yesterday is a failed breakout. If that's all that we had, and that's kind of the way I just break down the price action. That's all that I had.
Yeah.
Okay. And someone said to me, forget about that little candle, I can't move fast enough. George, what are you going to do here? Are you going to sell or buy? If that's all that I had, I would say I'd rather buy with a wide stop, because I mean, that's very weak. You know, if bears were giving me a candle, because it's an outside candle, a candle like this, good candle, breaking out beneath here, I'd be happy. But you've got an outside candle here, that's a trading range. So for me, that looks like a failed breakout. That's very weak. The following candle is also a doji. I mean, at the very least, you come into a key level. You must give us some strength. So then the next candle is good, bit of a tail. Then I get the biggest candle of probably, you know, of that move. Already alarm bells are going that maybe the bear momentum is waning. It doesn't mean that the bulls have taken over. All it means is do not jump into a breakout trade. Wait for a proper reversal pattern if you're going to sell. So if I'm going to sell, I want to see, you know, bears closing with a bit of strength down here, but I'm only going to sell up here. If I get a lower high double in there, that's it. I'm not going to sell down here.
Because the previous bar, not the current bar forming, but the previous bar, because of that tail, that's giving us that information, isn't it? That tail is sort of saying that the momentum is actually is waning as we kind of like hit this position down here.
Yes, and a huge candle, you know, 2-3 times, you know, twice the couple. It's probably exhaustion. Just one that last push that the bears are kicking in. You know, they could still trickle down in some form of a channel. You know, that's not unusual, and that's fine. But in order for us to jump into the market, you know, let's see the bulls try and reverse this, and the bears give us a lower high double top. If they do that, then, you know, they might give a second leg of that breakout. So bearish, but I need the structure. Otherwise, you can get caught up and just experience unnecessary pain. It won't be unusual if we come back, you know, after an hour or so to see the bulls reversing all of this stuff. That's what would be unusual. Doesn't change the fact that on the daily time frame, if we do get that pullback, you know, it might just be the breakout pullback lower one for us to still trade. So we may not get the opportunity to sell today, but certainly this week, because of what took place, there might be a lot more selling. So it's just, you know, you just have to be cautious. Who makes money in this kind of environment? Well, you know, if you are a scalper, if that's your strategy, you see a bear candle. And when I talk to some of the traders when they're around, you know, the table, when they come to Wednesdays in the market, if you're a scalper, you have to take the trades. You just have to sell, you know, and as soon as it starts to reverse, you get out. So scalpers should have been making money. They go in small fractions and just sell and sell and sell. And, you know, if they get a huge reversal, they're going to get out quickly. But if you're looking for swing trades that are comfortable, you got to wait for. You can't, you know, if it's not part of your basket of trades to trade breakouts, don't trade it. That would be my view on that.
Yeah, and it's almost you know, the way, you know, I'm I guess I'm not kicking myself necessarily not to get into it, but I certainly allowed my opinion to get in the way of what the messaging was telling me, because I was looking for upside, and because I was looking for upside, I ignored the picture that was suggesting actually at least closing the gap on the FTSE was on. So that also tells me that I need to realign, and I think this is where we really make the money, don't we? When we sort of like, we got to recognize when we're not quite in the game, and you got to get back in the game, not worry about the fact you've missed something, and and just wait, and it does look to me like a market which is waiting. I mean, it's amazing. It's down. The FTSE's down 2% from the open, which is a big move in less than an hour. So the likelihood is we do get an opportunity at some point.
Well, I mean, and the thing is, if you just go back on your charts and look at it, where you have missed a move for whatever reason, I'm pretty comfortable that unless I go and start writing up my notes and changing my strategy, I'm comfortable that this is gone.
Yeah.
But if you look at enough charts and you say, oh my goodness, if I'd waited for the next setup, I could have made, maybe you won't have made as much money, but I could have made money more comfortably without stressing.
Yes.
So and I mean, I've got enough examples I could show you where I would have just said, oh, you should have jumped in, okay, go and sell. And I lost money because not only would it have pulled back against me, but also that pullback, even if it's a minor pullback, because I get in, I realize, oh, that's stupid. You shouldn't have done that. Now I'm arguing against myself. And one of my rules says, if you do something stupid, just get out of the market. And by the time you get out of the market, it sets up again, and your neural constructs are so fried up. And I'm like, I make more mistakes in that day. And I've just learned after a lot of pain, it's better to let it go, whether you missed it, or not. Just wait for the pullback. There will be clarity. If the bears are strong, I mean, if you just go back, how many days are you going to see on your chart that's going to be the next 7-8 hours are going to be like this? You're going to find none. There will be none like that. There is going to be pullbacks. Now you just have to execute the pullbacks, decide where your stops are, and then jump into that. Having said that, I'm going to be eagerly waiting the open of Hang Seng, in about 30 minutes time to see 1313 to see if we get a pullback and a way to jump in, or any kind of structure there. Another one that I didn't get to talk about was gold. I'm pretty bullish on gold, because that pattern completed, spike channel. I think we spoke about that last week. Higher low, double bottom. I mean, huge acceleration up on Friday. So if you trade Fridays, and I don't, except just for the Hang Seng Open, hopefully you might have had a chance. I don't know. I haven't looked at the structure of the day, but I am bullish on it, even on the day, because I'm trading 5 minutes. I can look for long opportunities. If it closes up here, and you get into this 1900 level, then, of course, you got to be aware or consider that there might be a pullback, right? Pullback, breakout, pullback by the bulls. And on the 5 minute, if you see the pullback, you may want to just sell it on the day. But if not, you wait for the test of the that EMA. If the bulls are strong, there will be a breakout pullback, and we're going to accelerate up. It's almost the same, kind of inverse thinking that we had. So let's assume the bulls close up here on the day. And we do expect some form of a pullback. It may come tomorrow or maybe the next day. We don't know where it might end. But if we try and do a bit of simulation to say, well, the bulls want to test that high, okay, then a pullback would have to come down to this level at some point. So even if you don't do any trading today in that market, wait for the pullback maybe Wednesday or Thursday and buy into it. But as a 5 minute trader, you got to sell it if you're selling, and then buy if you buy. So I'm pretty bullish on gold. I mean, if I go down to the 5 minute, it's probably accelerated up. Now that's one I could look at and said, well, if I was paying more attention, maybe I should have jumped in at an earlier stage, but I didn't. So I'm gonna wait for a higher low double bottom of sorts somewhere up within here. So if you had been watching that quite eagerly since the market opened, you would have found an opportunity. But having missed it, no problem. I'm gonna wait to see if I get a higher low double bottom anywhere in here. So in other words, a pullback that kind of breaks the EMA, gives me a double bottom, gives me a tighter area for my stop. I'm going to look to find ways to buy into that market. So I'm pretty bullish on gold. Yeah, and I mean, I've got a currency pair here that I want to short. Euro yen. And she's gone. She's gone quite dramatically.
Yeah.
So I'm going to wait again for a pullback on this market. I must say on this one, I was not sharp and shrewd. I mean, we've already.
It's a funny one, isn't it, the euro? Because you know, with the, I don't know if you look at this, but with the rate announcement, it makes it just that little bit trickier to actually trade. You know, we don't know what they're going to say, and it makes it harder, makes it a kind of harder prospect, really.
Yeah, I mean, if you're gonna trade it, you really gotta be strict with, or you gotta be aware where the news announcement is gonna be, because that can just cause havoc. But also where you look to take your profits, and where you look to take put your stops in. That's probably key. I mean, in this particular scenario, I mean, the guys will probably be aware, one of the things we speak about. So there's a wedge top, another wedge top, and then you want to wait for a lower high. That would have been an opportunity, breakout, pullback there. That's about the only opportunity to have taken. I'm not going to cry about it because I know I wasn't deliberately paying attention. Not deliberately, I wasn't paying attention because I was enjoying the show.
Yeah.
but that would have been, so I missed that. That would have been a trade to take. Okay, it's not an outside candle. It's after a wedge top. It's after lower highs. It's a fail. It's everything that we talk about. Breakout, pullback. That would have been entry. Stop would have been above there. But then, you know, strong candle, you have to be trailing your stop because at any time you could have a reversal. Nothing else to trade unless, you know, we end up with another breakout, pullback, and a lower high somewhere within here if we do get to that level. So that's one I missed, mate.
Yeah. Well, I think it's going to be one of those days. I'm pretty much ready just to shut everything down. If I'm honest, I'm like, I don't like this market at all. It's just, I don't like markets when they're really full of emotion. You know, I like sort of getting in before the emotion kind of starts to kick in, but the emotion's already it's painted everywhere, and I just, it makes me. I think it sort of it's much more likely to draw me into a mistake, and for that reason, I think I might just shut this down and check it out maybe later this afternoon rather than trying to get into anything this morning.
I probably, now that you put it into those words, you know, when markets are emotional, I just make that same kind of decision because usually I'm up Hang Seng 50, you know, when it opens, the morning session opens 3:50 my time. But having seen what took place last week, I just said to myself, I'm going to have a beautiful lay in.
Yeah.
I'm not getting in. There's no way I'm getting in to trade that market because, you know, I just want the price action to be a little bit clearer. And I'm glad I didn't get up. And sometimes I'm lazy to get up and I say, oh, you should have gotten up and looked at the trades. But it's exactly that, where I'm very comfortable just to watch and observe. You know, if you've missed it, you know, it just goes into the toolbox as a lesson. And then keep watching it. You know, there's absolutely no need And March is good. We've still got 3 full weeks in March. So there's enough time to make good money in the month.
Yeah, agreed, mate. Agreed. Well, thanks as always, mate, for joining us. Fascinating kind of breaking down some of these bars as well. And we'll maybe get into a little bit more of that next week. But have a great week. Enjoy today, if possible.
Right. Nice and easy. Thanks, mate.
All right, buddy. See you soon. And to everyone else, thank you for being our trading buddies. Well, have a good week as well, and be very careful, to not trade just because you want to make money. Make sure that you're trading because you've got a good setup and it follows your system, and you'll be absolutely fine. These markets, these ones particularly, I think are the ones that are sent to test us more than others. So this is the FOMO trade. If you're starting to feel a little bit annoyed with yourself, which I am in a way. So I guess that's why I'm saying it. But it's okay. It's absolutely okay as long as you're not in anything. Better to wish you were in than wish you were out. Have a great week, guys. We'll see you next week. Bye bye for now.